A silent multi-billion-dollar legal panic is quietly forcing the world's largest corporations to pull the plug on artificial intelligence. Silicon Valley tech giants are scrambling as over $14 billion in venture capital funding suddenly freezes in midair. The corporate boardrooms that blindly rushed to implement autonomous AI automation layers last year are executing an emergency about-face. They aren't pausing because of cost. They are pulling the plug because of an existential legal catastrophe known as hallucination liability. Automated systems are quietly generating corrupt corporate data, exposing enterprises to historic regulatory fines, and forcing executives to execute a silent, total ban. The operational breakdown begins inside the hidden balance sheets of Fortune 500 companies. For the past 18 months, enterprise software providers sold a lucrative dream that autonomous AI agents could handle customer contracts, financial underwriting, and data compliance without human intervention. But as these models scaled, a dangerous architectural flaw emerged. Large language models do not actually understand logic. They process statistical probabilities. When forced to handle complex, unstructured enterprise data, these systems do something catastrophic. They confidently make up numbers. In the financial sector, AI agents have approved thousands of faulty loan applications. In legal sectors, software has accidentally leaked highly classified, proprietary client data straight into public training logs. This technical failure has triggered a massive wave of litigation, catching institutional investors completely off guard. Insurance syndicates in London and New York are flatly refusing to underwrite corporate policies for companies deploying unvetted autonomous workflows. Chief information officers are realizing that if an AI agent commits multi-million-dollar compliance fraud, the tech startup that built the software bears zero legal responsibility. The entire liability falls squarely on the enterprise balance sheet. Rather than waiting for a devastating public lawsuit, risk management boards are ruthlessly purging these tools, erasing corporate software subscriptions, and sending dozens of highly valued AI startups into immediate insolvency. The fallout from this liability crisis is completely resetting the tech landscape. The elite venture capital funds that aggressively pumped micro-startups to multi-billion-dollar valuations are quietly cutting their losses. The market is brutally shifting, moving away from flashy, superficial wrapper apps and redirecting capital exclusively toward hyper-secure, locally hosted software infrastructures that operate under absolute human oversight. The illusion of effortless corporate automation has dissolved, and an era of aggressive legal auditing has permanently begun.